Great. Excellent. So everyone knows that the program tonight is being recorded, so it's up to you if you want to be on video or not. Of course, we love to see everyone's faces and know who's here, but we are going to be keeping everyone on mute unless and until we get to the question and answer section of the training and presentation tonight. So I want to say a word of welcome. My name is Megan Chapman. I am the co-director of World Fellowship Center, which is a social justice focused retreat center in the Southern White Mountains that has been there since 1941. We were set up as the physical home for an interfaith peace and social justice movement that dates back to the early 1900s. And we have continued to thrive and be a space for radicals and progressives and people committed to peace and social justice over generations since 1941. And we typically come together as a community during the 10-week summer season. And everyone who is here is welcome to join us this summer or at other times. But increasingly during these very challenging times that we're passing through right now, we have been trying to do more and more virtual programs to support our extended community throughout the year and to offer support and ideas of how people can be engaged in concrete resistance. So that really leads into the theme for tonight, which is war tax resistance. It's a issue I know, some people have been practicing war tax resistance over generations as a form of conscientious objection. And for some people, it's something that they may have just discovered or heard about, as different conflicts emerge and become, an issue of concern, and you start thinking about where your tax dollars are going. So whether you are new or old to this issue, I think that tonight is going to be a wonderful presentation. We are so fortunate to have New Hampshire Peace Action co-sponsoring with us, and to have Lincoln Rice from the National War Tax Resistance Coordinating Committee out in Milwaukee, who is, going to be sharing his expertise with us. The format for tonight is going to be a presentation to start with. It'll take about 30 minutes, 40 minutes of presenting, teaching, sharing slides, and then we'll have space for questions, answers, comments, sharing, asking for strategies, whatever it is that's going to be useful to you tonight, as we are in the midst of tax season, of course. So with no further ado, I would like to quickly hand over to Amy Antonucci, who's the board chair of New Hampshire Peace Action, to say a word about the work, very important work that they're doing here in New Hampshire, and Peace Action nationally. And then we'll get into the presentation. So Amy, over to you.
Thank you so much, Megan, and thank you for putting this together. We have, are happy to be sponsors and supporting, but we really appreciate your taking the lead on it. I'll just let folks know New Hampshire Peace Action has been around for more than 40 years now. We're probably going on 45 by now. And it's our mission to educate, mobilize, and organize to build a more peaceful and just future for all. We believe we can live in a world based on cooperation instead of competition and conflict, and that mutual benefit and shared security can lead to this more peaceful and just global community. And we are engaged in programming and action. We have a particular focus lately on war in the Middle East and nuclear weapons, ending them. And there's a lot more that we work on too, but those are kind of the big ones right now. And we are always glad to have folks, even those of you from far away. Again, we have a regular Zoom series as well. So you are welcome to join us and learn more about what we do and about the peace movement in the country and around the world. And I think that's probably enough from me. So I want to hand it over to Lincoln now. Again, Lincoln is joining us from the National War Tax Resistance Coordinating Committee, and we're excited to learn from you. Thank you so much for being with us.
Thank you. It's a pleasure to be here. I'm going to put a few links in the chat, and then I'll put them there again at the end because some folks, maybe they'll miss this part and it won't be in their chat. But I'm going to share my screen. I'm hoping to keep my presentation to 30 minutes and then leaving plenty of time for discussion, questions, etc. But yeah, this is essentially, I'll be going through a war tax resistance 101, kind of the basics of refusing to pay for war and resisting U.S. militarism. As has been stated, this is the National War Tax Resistance Coordinating Committee. I've been their coordinator since 2018. We often refer to it as NUTRIC for short, just because National War Tax Resistance Coordinating Committee can be quite the mouthful. Some important disclaimers. Some methods of tax resistance are not legal and so should be viewed as a form of civil disobedience. And tonight we'll be going through, if you are thinking of practicing a method that is not legal, it's like, well, what are the risks? So then what's most likely to happen? Similar to in many cities, jaywalking is illegal. It doesn't mean it's always enforced. So different laws are enforced to different degrees. Government laws and policies are subject to change. So we'll definitely be talking about what has been, decades long experience for war tax resistors, but realizing that those could change. War tax resistance counselors, we're not here to kind of give tips on how to fudge or cheat or gimmicks. Again, it's coming more from a stance of conscience and trying to do what we believe is the best decision given the current circumstances. And normally, someone giving this talk might say, I'm not an accountant. I'm not a CPA, but when I went to college, my undergrad is I got my bachelor's in accounting. So I have a background in accounting, but I can say almost everything I'll be talking about tonight, I did not learn in any of my classwork. I learned the basics of how to do an audit, how to fill out someone's tax forms for a person or a business, or how to keep the books for a business. But it was just always assumed people are going to pay. It never came up like, what do I do if one of my clients says they're not going to pay? So I only give that as also a disclaimer that if you do have a good relationship with a tax preparer and you ask them about this, they really might not have any idea what the possible consequences would be. But that being said, I'm not a CPA, a financial advisor, or a lawyer, though many of our resources over the years, there's been a lawyer who's been very helpful for us in making sure that we're stating things as accurately as possible. So the National War Tax Resistance Coordinating Committee, it's a coalition of groups and individuals that started in 1982. And essentially, at that point, there were many active local war tax resistance groups, and some of them were recreating the same resources that maybe a different group had created in another part of the country. And our purpose is more to connect people and organizations that are interested in war tax resistance as a place to share resources and knowledge and support one another. I'm not going to spend as much time on this kind of preliminary information. If you're here, you'll probably have a sense of this or perhaps even know it better than I do. But the United States spends more on its military than any other country in the world. It's not even close. The Pentagon has never passed an audit, et cetera, et cetera. When it comes to just our internal budget, so to speak, each year the War Resistors League, this is one of their pie chart they put out each spring, kind of combs through the president's proposed budget and kind of says, is this, maybe it's under Veterans Affairs, but maybe it's kind of it's a current military expense to do some healing for some damage that had been created during war. So it should, even though maybe that's something we still want to support, obviously, realizing that it is a military expense. A lot of nuclear programs are under the Department of Energy. And so they kind of comb through and look, where do these things really accurately belong? And in most years, our military spending is anywhere between 40 and 50%. There's another group also, the National Priorities Project, that even though they're coming at it separate people, but similar method combing through that budget, both groups seem to come to very similar results each year. So why we resist? Traditionally, it comes from a stance of either pacifism or an issue with the imperialism of the United States or current conflicts, selling of weapons, war crimes. We saw a huge increase in interest and practice of war tax resistance last tax season because of the war in Gaza, which is um, most of the weapons used in Gaza. I think estimates are between 70 and 75% of the weapons and missiles and bombs used in Gaza were US funded. This year, we've seen an additional surge because of the actions of the Trump administration, kind of a mixture of uh, folks who are disgruntled with how democracy is going in the United States, but also seeing this ramping up on border militarization, deportations, militarization of the police. And uh, maybe what's lesser known is that the US military is the number one institutional user of oil in the world and hence has a huge impact on the environment. And even though it made news among environmental circles when Trump recently pulled out of the Paris Climate Accord, that accord, even when the United States was a part of it, it didn't cover greenhouse gases created and emitted by the military. Since those are considered national security, in order to come to those agreements, militaries were exempt from greenhouse emissions and from any targets for lowering greenhouse emissions did not take into account military use or military creation. I'm not going to go through all these, but just to give a sense that it seems if we have enough information about a civilization, we can find instances of war tax resistance. The earliest recorded instance in what's currently the United States belongs to an Algonquin tribe in the 17th century that refused to pay taxes for a Dutch fort. More recently in Myanmar, otherwise known as Burma, when the military took over that country in 2021, because they have a public utility and the payment of utility bills is one of the main ways that that government was funded. Millions of people in Myanmar started to refuse to pay their utility bills, even though for many, especially those in the city, this led them to have soldiers coming to their homes demanding payment. So, for the most part, I'd say much more. The risk of being a war tax resistor in a place like Myanmar is much greater than in the United States. So which tax resistance method is right for you? So kind of shifting gears more into the how to. Uh, one of the, it could be an issue or opportunity depending on how you look at it, a problem, is there's a lot of different ways to practice war tax resistance. There's not a cookie cutter method. And so, sometimes someone will call the office and say, well, how do I do this? And first they need to know, like, well, are you employed? Are you self-employed? You know, are you married? What does your spouse think of this? There can be so many questions that come into it. What are your risk tolerances? And so, you know, just like taxes, it can be complicated. And that's other than fear of the IRS, probably the biggest deterrent is the complexity of taxes. But on the positive side, there's also that allows for a lot of adaptability and people can really set risk tolerances. Perhaps they want to just resist a smaller symbolic amount, which will still cause the IRS to have to go through its whole protocol of sending tons of letters, which we'll get to later. But the risk of practicing some of this lower level resistance, it causes problems for the IRS, sends a message, but the chances of any even added difficulty in one's life is very low. So we'll get a little bit into what that actually looks like, but just knowing there's a lot of adaptability and in some instances options for creativity. But essentially, war tax resistance falls into two basic methods. One would be illegal and the other legal. The illegal one, or the act of civil disobedience, is that you're refusing to pay some or all of a federal tax debt. That is always illegal. And we'll get into that a little bit more. The only legal method is essentially to earn less than essentially to not have taxable income. If you don't owe taxes, then not paying what you don't owe is not illegal. And for many folks, lowering their taxable income so that they don't owe, or essentially eliminating taxable income so that they don't owe anything, might also, check some other boxes when it comes to that person's values. They might want to live more simply, not participate as much in a consumer society. They might want to leave a lighter carbon footprint. So a lot of these things, the decisions could be based on multiple factors. Generally speaking, to not owe any federal income taxes, the general guide is your income lower than your standard deduction? So the standard deduction based on your filing status um, kind of takes right off the top a certain amount of taxable income off what you've earned. So if your filing status is single, your standard deduction is $15,000. If you don't make $15,000 in a year as a single person, you won't owe any taxes. If you're married, then that doubles to $30,000. If you make less than $30,000, you won't owe anything. Though, depending on a variety of circumstances, you might have other tax deductions or credits that might allow you to make more and still not owe anything. But that's where that minutia is getting a little bit beyond the purpose of this discussion. And if someone thought they're maybe near zeroing out the taxable income and were looking for ways based on their own situation to try to eliminate taxable income and not owe anything, I would recommend at that point, like talking to an accountant, someone who does taxes regularly and is familiar with, people of your kind of general, someone who maybe works in the field you work in and is of your income bracket, what would maybe be obvious to them, deductions or tax credits that you might qualify for. If you're an employee, you might notice that your federal income taxes are already removed from your paycheck. So if you're in that situation, like you may have discovered, like, oh, I'm interested in being a war tax resistor for this filing season, but I did my taxes and I see I'm already getting a refund. What likely happened was all of the federal income taxes you owed and more were removed from your paycheck during the year. And in the United States, we have this kind of strange situation that isn't the case in places like Canada or England or many other countries that have these deductions taken out of your paycheck, where if you're in Canada or England, for instance, and you're working a wage job, it's determined by their federal government how much is removed for federal income taxes. In the United States, your employer will give you a W-4 form, which is a form created by the IRS, but it's just meant to be a tool between you and your employer. And you get to fill out this form and tell your employer how much you want to have removed for federal income taxes and sent to the US Treasury or the IRS. And so we have this strange, unique situation. And I'm not going to get into the minutia because this won't apply to everyone of, how you might want to fill out your W-4 to eliminate or lower your federal income tax withholding during the year as an employee. But we do have this website, which I put in the chat earlier, and I'll put in the chat again at the end. It's nutric.nwtrcc.org/W-4. And there, depending on kind of your learning style and how much you really want to know, there's a 8-page booklet to download that really goes through everything if you want to know everything. There's a 1-page, 2-sided flyer that just goes through the basics of how to adjust your W-4 form. And then there's a 10-minute video which kind of shows you more visually how to actually fill out the form in a way that could eliminate or lower your withholding. And this form, it's usually something you're given when you're first hired or your first day of work, and it can kind of be intimidating. People just often like say, put their name, they're married, and sign it, or single, or whatever your filing status is. And but they don't fill it out the way that even the IRS hopes that you'll fill it out. Ideally, you're supposed to fill it out so you don't get a refund at the end of the year and that you don't owe anything at the end of the year, that the correct amount will be removed. But this is a form that you can have updated at any time, depending on how big, the organization you work for. It might be something where you're supposed to turn in the paper W-4, or sometimes you just go on the computer system and if you have it where you go into the computer system to check your pay stub and all that, it could be that you can just change it without even having to let human resources know. So again, with computers and all of that, it kind of depends on how you can change it, but anyone can change it at any time. And at the very least, then, even if someone still wasn't positive that they wanted to be a war tax resistor, now when April 15th rolls around, you'll realize when you fill out your tax forms that you'll owe federal income tax, and it'll be up to you if you want to pay or how much you want to pay. The other thing is, even if currently you're getting a refund, our resources here could help you fill out the forms properly so you're not, at a minimum, you're not giving the federal government a zero interest loan to be using on all these different terrible program, deportations and bombings in Yemen and weapons for Gaza, etc. If you're self-employed, it's a different situation. Nothing is withheld from your paycheck, not even Social Security or Medicare. So it's up to you. Normally, you're expected to pay these quarterly. So the first quarter payment that's coming up is due on April 15th. And so for many war tax resistors, they might, just pay their what they believe will be their Social Security and Medicare based on their first quarter of income. And then it's up to them if they want to pay anything above that. Some people are self-employed to kind of maybe fall through the cracks and then not have reportable income to the IRS and maybe not even file, which we'll get to shortly. But if you're self-employed, uh, depending on what type of self-employment you're doing or who you're doing work for, it may or may not be reported to the IRS. So if you're doing work for a company, that company is supposed to send you and the IRS a 1099 NEC form, non-employee compensation, if you make $600 or more during the year from that client. Um, if you're just doing, like, say, you're a plumber and you're just working for yourself and just doing work for different households, those households you're doing work for aren't required to report the income on a 1099 form. So you might be in a situation where most of that income is not reportable, and it's up to you if you want to decide to file and kind of declare to the IRS that you have this tax debt, because otherwise it'd be more difficult for them to find out how much you've made and what you actually owe. Um, there's kind of this strange situation over the past few years of I don't know, it's strange at least compared to previous decades of the gig economy where you could be doing work for, or at least you could be selling items on eBay or driving for Uber, and it's not a traditional self-employment situation. In the past, you wouldn't get a 1099 NEC from them because you're not actually working for eBay or Uber. If you're selling items on eBay, your income is actually derived from the people that you're selling it to. eBay is just a third party that connects you and handles the monetary transaction. And the same with Uber, you're not working for Uber, you're working for the people you're providing rides for. Uber is connecting you and handling the income as a third party transaction. So up until a couple years ago, if you were in this gig economy type job, it that this third party income collector and and redistributor of this income fund uh, income stream would only have to report this income on a 1099-K form if the person made more than $20,000 on through that company as a third party. Because now this has become so prominent, there's been a move to close this loophole. So for the tax year that just finished, 2024, they lowered it to $5,000. Our current tax year, 2025, they lowered it to $2,500. And next year, 2026, it'll fall down to $600 to fall in line with kind of a regular self-employment type of situation. So for people who are kind of trying to avoid having income reported to the IRS, that loophole seems to be closing. So then there's the situation of filing versus not filing. There could be philosophical reasons or different advantages or disadvantages for each. When it comes to filing, it allows you to send accurate forms to the IRS. And if you're sending in paper forms, which is kind of going out of style, but is still an option, it allows you to send a letter of protest if you would like. It does make collection slightly easier. If the IRS wants to garnish your wages or levy a bank account or something like that, before they can start the collection process, they need to determine what the actual tax debt is. And so that the amount of the tax debt is determined once they process your tax forms. And so that's kind of the first step. If you're not filing, then in order to determine how much you owe so that they can begin the collection process, they have to file for you. And normally they're going to base that on some sort of information that they'll collect. And at least at this point, it requires a person to do the work, which is with, I mean, you may have heard they've recently laid off 6,000, or they're in the process of laying off 6,000 workers who are mostly on probation. But really, since 2010, we've seen a shrinking IRS, and anything that requires a person to do the work is not something that they're going to have to decide how to focus their resources because a lot of people are going to fall through the cracks. Um, so all right, sticking back with filing again, another advantage to filing is that it's once your tax debt is assessed, when your tax forms are processed, it begins a 10-year statute of limitations. And so 10 years after your tax debt is assessed, any principal amount that was resisted and any penalties and interest associated with that tax year become completely uncollectible, and the IRS can no longer take any action in any form on that tax year. So it just kind of disappears forever. Um, Another advantage for filing is it makes it easier to apply for scholarships and financial aid. For FAFSA forms, it's not, well, it's not a requirement that you pay your taxes, but they want to verify your income. And the easiest way to verify your income is to look at your tax forms filed with the IRS. If you haven't filed tax forms, it's up to the person processing your application if they're willing to accept other forms of verification. So some people have ran into more or less problems if they are a non-filer. Health insurance subsidies, on the other hand, through Obamacare, require that you file. If you don't file your federal income taxes, you don't it's a must in order to receive those. And there was a person kind of that tested the waters with that a few years ago, and it took their state healthcare exchange a couple years to notice, but they eventually noticed that this person hadn't filed on the federal level and stopped them from receiving further subsidies. So it's just something to keep in mind. If you Even if you're not going to file, we would recommend that you fill out your tax forms anyways. In the future, if the IRS filed for you and you wanted to dispute the tax debt, because if they file for you, they're probably going to overestimate income and not take deductions that you would take. So you want to be able to dispute that if the IRS files for you. Also, even though those forms haven't been filed, when people have been applying for financial aid, the we've found our experience has been that most people processing those applications are willing to accept non-filed tax forms in place of ones that were filed. They're assuming if you went to the time and energy to like fill these out, that they probably accurately represent your income. Again, as I previously mentioned, it makes collection harder because the IRS first has to notice that you should have filed, then go through the process of collecting some information and filing for you. Um, they just have traditionally have not been very good at that, though that could change during the Biden administration. They started using AI to at least um, go through their records and determine who were high income earners, which they considered more like $400,000 plus a year earners who were non-filers, because they had realized over the past 10 years that non-filing was an easy way to never be noticed by the IRS. So it seems like the IRS is starting to notice that, and it might become a more difficult way to fall through the cracks for people who don't want to file. There is no statute of limitations, or at least it doesn't kick in until the IRS files for you, because at that point your tax debt is assessed and the 10 years would start. And there is an additional penalty for not filing. But again, they'd first need to know you didn't file and file for you to start assessing that penalty. So now talking about some myths of war tax resistance before we go into what normally or could actually happen. There's always this thought, well, I'll go to jail. When I talk to college classrooms, sometimes I'll get asked multiple times by different students because they just cannot believe I'm still standing in front of them talking to them. Um, and so, it's one of those things. I'll say the risk of actually being charged criminally and facing any jail time is almost zero in practice if they file, you file your forms accurately. Um, Basically, over the last 25 plus years, in almost every situation, anyone who was charged criminally filed their taxes and purposefully left out large amounts of income or took deductions they weren't supposed to take. And in all of those instances, those are people who unfortunately were not aware of Nutric. And so they weren't aware that by falsifying their tax forms at the end of the year, that they were actually increasing their risk. The IRS, with its limited resources, seems more willing to criminally prosecute some war tax resister who falsifies their forms, where they used to sometimes, again, they could criminally prosecute anyone who doesn't pay, no matter if their forms are filed accurately or not. But when they used to do that with selective people during the 60s, 70s, and even the early 80s, they realized that, especially if they had filled out their forms accurately, these folks would raise more awareness about war tax resistance and were often viewed as very sympathetic. So there was a shift in practice to no longer prosecute those who accurately filed their taxes. Um, the one exception in 2005 is Tony Serra, where he's still around. He's an activist lawyer in the Bay Area, San Francisco Bay Area. And uh, he seems to be a person where maybe because he was a lawyer and the IRS, when they do criminally prosecute, they need to illustrate that you really understood what you were doing. As a lawyer, they could say he really understood what he was doing. So I would give the caveat, if you are a lawyer or perhaps a CPA, there might be a higher bar when it comes to tax resistance and a higher risk. Another myth about war tax resistance is, well, the IRS will take my house, my car, my property. Actually, if this was 1997, then I wouldn't say this was a myth. It used to be common enough that every 2 or 3 years there might be someone in the war tax resistance movement who the IRS started proceedings to seize their home. I know quite a few folks who were active war tax resistors during the 70s and 80s and early 90s who had their cars taken. But property seizure of this type really came to an end in practice in the late 90s. The IRS was kind of viewed as being overly aggressive in this. And so we see that seizures of property went from like 10,000 plus a year to now any given year, it's usually between 50 and 100 items that they're taking. And we haven't known of a war tax resistor who's had any, personal or business property seized since the 90s. It seems to be something that the IRS saves as a method to try to embarrass the uber rich into paying their taxes. So maybe if they take one of their boats or start taking their third home, they might be embarrassed enough to start paying their taxes. Another myth is the IRS will just get more money in the end. Now, on a individual level, this could end up being the case, but kind of looking at the bigger picture of potentially tens of thousands of war tax resistors that are probably around right now, um, most of that tax debt will not be collected. And this is from a chart put out by the IRS. It's the last time they put out this information, so it's almost 10 years old. So the numbers have probably actually grown substantially. But at this point, the gross tax gap was almost $500 billion. And the gross tax gap, the IRS, that's the term that they use for what's the difference between what they believe they should have been paid for a given year minus what actually came in taxes for that year. And they're based on their history of collection at that time, which has only gotten worse and less efficient, they believed that they would, for any given year, collect about $52 billion of a tax debt. So roughly like 12 to 13%. So the vast majority of unpaid taxes are never collected upon. But again, it does happen for some people. War tax resistors don't pay for things our society needs. So for those who are actually refusing to pay some amount of their federal income taxes, there's a long tradition of kind of redirecting those funds to groups and organizations that could use that funding that perhaps are underfunded and could do really wonderful work. And so a lot of war tax resistors, depending on where they're at, might do this on a individual level, but there are multiple groups throughout the United States that kind of pool their funds together. Maybe the two largest is there's a group in the Boston area called New England War Tax Resistance, and a group in the Bay Area in California. And I know at least with the Bay Area last year, I believe they both of them will actually send out. They'll have a period in the early spring or late winter where local justice groups can apply for grants. And I don't remember what the New England group, how much they redirected last year, but I know last year the Bay Area redirected, I believe, over $60,000. And they used it as an opportunity to have a granting ceremony where all the different groups came together and shared a little bit of what their work was with the larger group and kind of turned it into a networking event so that people in different justice kind of veins of work could get to know each other and hopefully maybe work together on future projects. So a lot of people try to be creative in that. And it also then shows that you're not doing this just to keep the money for yourself, but you still want to do something to better society. So what are the actual risks? Um, Many war tax resistors simply get a stream of letters. This would be more so if you file. If you file, the one thing that the IRS spares no expense at is paper and computer generated letters. So even for myself, I'm a filer who refuses to pay, and my wife and I have filed jointly. And each year we'll get kind of a regular letter saying, hey, you didn't pay. But then we'll often get letters for every tax year that we didn't pay, the last 10 years that are still before the statute of limitations goes out. And they'll send one both to myself and to my wife. So usually there's like a day in the middle of the summer where there'll be 20 letters from the IRS waiting for us. And I must admit, it's still even, I've been doing this since the late 90s, and my heart still skips a beat when I get letters from the IRS. It's just kind of imbued in us, I think, to fear the IRS. So anyways, you'll get letters if you file. Um, a salary garnishment could happen. Again, it's very rare. Maybe I'll start with the Social Security garnishment. If you're someone who has a tax debt and then starts receiving Social Security, the IRS can take 15% of your Social Security until a tax debt is paid off. And that's actually pretty common, or at least it was common before COVID. But pre-COVID, anyone who started getting Social Security, probably within 6 months to a year, would see this 15% garnishment start. They had to put a stop to it as part of the response to COVID and people's loss of income. They stopped Social Security and wage garnishments. And actually, up until now, I still don't know anyone whose Social Security garnishment's been restarted, even though they could have restarted them back in 2021. But normally, that's something they do quite easily. It's another federal agency. Salary garnishments, even before COVID, maybe I'd hear of one or two people on our network each year that received one of those. And the issue with that comes to there's so many people scamming and trying to pretend to be the IRS that if a employer gets a wage garnishment for one of their employees, they often like to call the IRS and verify. And the IRS realizes this, so they only send out as many wage garnishments as they know they have people to handle the phone calls. And so they've been very forthright in saying that each year there are millions of people where they know exactly where they work and they don't garnish them because they don't have the staff and personnel to handle the phone calls from the employers. And similar with bank account levies, that actually we've had a couple this winter with longtime war tax resistors who've been doing it for decades. Um, that it's still not very common. And these are people who had interest-bearing accounts where their interest was reported to the IRS, and the IRS could have been levying these bank accounts 10, 20 years ago. So it's just, again, why they chose these people and why they only got around to it now is really difficult to say, but it's something that does happen from time to time. State refund levies, if you overpay your state, if you have state income tax, they actually are kind of good at that. When I first started, I used to overpay maybe by $100 or $200 to the state of Wisconsin every year. And it's like every other year they'd take it from me. And I would get a letter from the state of Wisconsin saying that I'm not getting my $100 back. So now I've gotten better, so I don't overpay the state of Wisconsin. Interest and penalties, kind of a good rule of thumb is that the interest and penalties are based on percentages. And so over the course of the 10-year statute of limitations, normally a tax debt will triple. So if you decide this year I'm going to resist $100, before it would disappear and become uncollectible, it would grow to 300, 1,000 to 3,000, 10,000 to 30,000. So it's just kind of, at least you'd know the potential or the worst case scenario if they happen to collect from you right before that tax debt would expire. We already talked about the loss of health insurance subsidies for non-filers, difficulties in student loans. Once someone owes about $25,000, they'll probably get notice of a public lien has been sent to their county courthouse. The IRS will let you know that this has happened. And the main practicality of this would be if you were a homeowner and you were going to sell your home, that if the person you were selling it to is getting a loan from a bank, that bank would probably, it's usually standard protocol that they would check with the local county courthouse to make sure there's no outstanding debts against you. They would check and see that the IRS filed one against you. And so unfortunately, they would get kind of first dibs on the money from your home sale, and then you'd get the remainder. Thus far, we haven't seen it affect anyone who's trying to purchase a home. And in the past, maybe 2015 and earlier, it seemed like when they filed this notice of a public lien, it might also affect someone's credit. And I'm not, this is where I just don't know, have enough information or know how they used to do it. But over the last 10 years, we haven't seen it affect people's credit. So I'm not sure if in the past the IRS also sent it to crediting agencies, or if crediting agencies used to be better at checking with local county courthouses about tax debts. I'm not sure where the disconnect is, but I know I've had a public lien against me locally since 2018, and I'll check my credit every few months, and it's fantastic. Not that I'm planning on using it for anything, but I know people will ask me, so I just want to keep it up to date. The last thing is loss of a passport, or at least the ability to renew a passport if you have what the IRS considers a seriously delinquent tax debt. So that number goes up every year with inflation. For 2025, it's $64,000. If your tax debt reached that, they would send you notice that they contacted the State Department to say that you can't renew your passport or get a new one. If you currently have a passport, you can use it till it expires. So this is definitely something to keep in mind if people have family abroad, love to travel, need to travel, etc. And truthfully, we're not sure if it's constitutional. It went into effect in 2018. There hasn't been any serious appeals of this law. There have been a couple people who have like appealed it, but they were kind of just doing it on their own without help from a lawyer. And even in one of the appeals, one of the judges, in her opinion, stated that like if you had come at it from this angle, I think you'd have more of a case. So again, it's just unclear, but it's the law of the land for now. Community property states, maybe I'll just if everyone here is on the East Coast, which may not be the case, then you don't need to worry about this. But if you're in Wisconsin like me or in one of these red states, these are community property states, and essentially any debt or asset that you accrue after you become married belongs to both of you. So in most states, if you were married or you're going to get married and your one spouse is going to be a war tax resistor and the other doesn't want to be, you could just file separately, and that would basically protect the non-war tax resistant spouse. They couldn't go after any of their property, garnish their wages, bank accounts, any of that. Um, but in community property states, even if you file separately, if the IRS realizes you're in a community property state, that's another question. But if they do realize that you have a smarter person assigned to your case, they could go after the spouse, even if you file separately. So again, it's just something to keep in mind if you're in a community property state. I mean, even if you're not, if you're getting married, you should have a serious conversation with your potential spouse. But if they're going to be actually on the hook for that debt, it's even a bigger conversation. And this dynamic changed a little bit with Obamacare because in order for a married couple to receive healthcare subsidies, not only do you have to file, but you have to file jointly. So that's kind of another wrinkle with Obamacare. So kind of wrapping up my presentation here, just definitely I'll put everything in those resources in the chat again, but our website, we have things on our website that if people want paper copies, they can, for a small fee, we'll kind of just for making the copies and mailing them out, we'll send them to you. But otherwise, every resource that we personally create is available for free on our website to be downloaded. Hopefully tonight's at least laying the groundwork. And if you wanted, I'd invite everyone if they wanted to kind of look deeper into their situation, just take some time, explore our website because everyone's situation can be different. Our website is just so huge. And also, if you're having trouble finding something, you can do what I sometimes do. Just Google Nutric, the acronym, and then whatever topic you're looking for, and it'll probably bring up our page right away. You won't even have to try to figure out where to find it. So again, I'll put this in the chat in a moment. Our website, the W4 resource. We have a list of counselors who are volunteers we have them organized by state that if you wanted to connect with someone and just kind of talk through some issues or concerns you might have about your own situation, these are people who've gone through some additional training and are happy to volunteer their time to talk to people about this. They're passionate about it. We have a newsletter that for $25 for a paper subscription to cover those costs, but otherwise we'll send you an e-newsletter for free. You can sign up for that. It comes out every 2 months and kind of covers the latest updates and some stories of people. And then lastly, they're hosted on our website, but they're separate from us. It's called the War Tax Resistance Penalty Fund. And if you do happen to be one of those unlucky people out of the other war tax resistors that do have your wages garnished or bank account levied, um, they're essentially a mutual aid group, and they'll pass the hat among each other to reimburse people at least for the penalties and interest. So they won't help reimburse for the principal, but they know the bigger hit for people is often not only that they might be collecting the principal, but if you're getting collected on near the end of that 10-year statute of limitations, now the collection, they'll be going after triple the amount. And so at least they'll help out with the penalties and interest, everything above that principal. And I know they're supposed to be sending out a request this spring still for a couple of people who are collected upon this winter. But kind of pre-COVID, maybe it was like 2 to 3 times a year, they would send out a notice to everyone on their email list, which you can sign up for at that website if you want. And they'd essentially the call would be if everyone could pitch in like 25 or $30, we can help reimburse everyone's penalties and interest that put in a request. So just a great group that reminds us that we're not alone and we're here to support one another. So I'll pause there.
Great. Thank you so much, Lincoln. That was incredibly informative, helpful to have all the slides and go into so much technical detail as well as kind of understanding the bigger picture, the why, and so many examples. I want to open it up for questions. I actually have a few questions, and there's one in the chat box already. It's up to you if you want to voice out your own question. You can use your react button to raise your hand, or you can raise your hand on video and we'll try to see you. React button's a little bit easier. Or you can type a question into the box and we'll read it out. So really up to you. I want to start with Amy's question, which is also a question that Harmony is sharing. Amy asked, for self-employed folks, are there any references on how to pay quarterly for only certain parts of taxes, for example, Social Security, but withholding other estimates, like the percentage that would be going for war? Does the IRS recognize the distinction? Or are there certain forms to use in this case? So,
Sure.
three-part question.
That's a great question, and there aren't any forms, but kind of the good rule of thumb is that the self-employment, it's called, the IRS refers to it as the self-employment tax, but the self-employment tax is essentially your Social Security and Medicare payments. And if you're working for an employer, you pay half and your employer pays half. But when you're self-employed, you pay the whole amount. And the whole amount ends up being 15.3% of your earnings. So if you're going to be making your first quarterly payment on April 15th, you'd look at what are your earnings from January through the end of March. You'd multiply that by 15.3%, and that's your Social Security and Medicare payment. And oddly enough, it feels weird to just send that and know it's just going to the Treasury Department. It all seems to kind of go to the same place. But we do know that, over the decades for self-employed war tax resistors who do pay their Social Security and Medicare, that it shows up on that form. I think in the past, they used to maybe mail it to you. I think now you just have to access it yourself online if you want to see like how much are you paid into Social Security and well, I guess that form just shows how much you paid into Social Security, but it does seem to be earmarked. It seems to be given priority. I know in the memo, I always write Social Security and Medicare anyways. I'll send in a money order, but it does show up there on the Social Security site for your record. And then for people who have been self-employed, who then file for Social Security, they do get their full Social Security. So it's one of those strange things. There's no separate place to send it, but it seems that the IRS gives a priority.
Great. That's really helpful. I have a question about kind of this political, which I imagine, you might not be fully adapted to since none of us are. And there's so much that's changing, on a day-to-day basis. But it was really helpful for me, when you would look at like, what are the patterns over the last 10 years or 20 years, both what's happened in terms of enforcement and also kind of, that understaffing the IRS or reducing the staff of the IRS is something that has actually been a trend, prior to this moment. But just curious if you have kind of or if in the conversations that your committee's having, if you guys are looking at um, kind of the risks, any additional risks to taking this step? I mean, I think there's a lot of additional motivations to perhaps be considering this at this moment, but what are the potential additional risks for maybe punitive action? Although obviously, like you said, somebody has to actually look at the papers and notice that something is not happening, depending on the strategy that's being used. So if you have any advice or can let us know a little bit more about the conversations happening right now in this political moment.
Sure. It's definitely a question I get asked a lot, and thus far we haven't seen any change with the IRS or weaponization of the IRS. But those things could happen under kind of the last time that the IRS was actually weaponized by a presidency was under Nixon. He would use it as a tool to kind of bother some of his enemies. It left such a bad taste in everyone's mouth that there was much greater separation between the executive branch and the IRS after the Nixon presidency. And at least since then, during different administrations since then, we've not seen it in any way being used to go after the enemies of a certain sitting president. This president obviously is very different, doesn't care about bucking those types of trends. We could see something like that happen, but if it was going to happen, especially with all the cuts that they're making to the IRS, I would think it would have to be very focused on some very certain people that he has a problem with. It couldn't be used as like a blanket, like I want to go after all these folks because just they don't have the resources to go after a lot of folks. So at least that is a question. We haven't seen it happen yet. Uh, there is probably I mentioned how lawyers might be more at risk. Another group that would definitely be more at risk, and they were more at risk before if you're not a citizen. Um, so even if you're here, if you're in the United States and have the proper paperwork to be in the United States, for those, at least before this moment now, uh, it never non-payment of taxes didn't seem to affect their status, their legal status in the United States. But where the increased risk happened, even for those folks, is if they left the country and tried to come back in, the person processing their paperwork sometimes would decide to check with the IRS. And if they had an outstanding tax debt, it's kind of more their prerogative if they didn't want to allow them back in the US, even though they could. The other thing is that people who were here with proper paperwork, if they were war tax resistors and then started to go through the process to become a citizen, it could prevent that process from happening. So, but now obviously we're seeing, you know, certain people being deported for political activities and views, even though the IRS traditionally hasn't deported people here with proper paperwork just for not paying their income taxes, maybe there could be a move towards that also. So I would definitely say that non-citizens are definitely more at risk, and I would caution them to maybe even have a conversation with an immigration lawyer or someone who might be up on the latest things that are at risk for people who aren't citizens of the US.
Thank you. There's two really good questions from Gabe in the chat box, and then also from Priscilla. I'm going to seem all a little bit like complicated, so let me take them one by one so we can really make sure we get answers. The first one is it recommended to only resist the amount of taxes that would be used for military spending, about half, if you go the filing method?
Sure. The risk associated with war tax resistance, if you're refusing to pay, seems to be more dependent on the amount you're refusing. So many war tax resistors kind of, again, that might be a personal thing if they feel very strongly about only having their war tax resistance match kind of what the budget is dedicated for when it comes to military, might feel strongly like I can only resist 50%. Others, the thought might be 50% of anything I send in is going to be used for the military. So they're like, I'm just going to redirect the entire amount to other places. Um, but for others who maybe be more inclined to resist 100%, if let's say they're a bit of a higher earner and they realize if they resist everything, not only are they going to have that notice of a public lien come out once they hit $25,000, at that point, they're also a little more likely to have their bank account levied or wages garnished. And if they would meet that $64,000 seriously delinquent tax debt mark, then they might lose the ability to renew their passport, or at least probably would. That the IRS has been very good at that. Putting that into effect when people hit that $64,000. So again, I'd say the risk is more associated with the dollar amount, not it doesn't they don't seem to really care what percentage you're resisting.
That's helpful. Thank you. Question from Priscilla. If an employer or an organization receives federal funding, does an employee's war tax resistance have negative implications for the organization's financial standing?
I wouldn't think so. Maybe I need to know more about a specific situation. Like the one that just pops into my mind immediately is like if you worked for a university. I mean, most universities get gobs of federal funding, though that might be changing. Um, or, I and I've taught as an adjunct at a university. It never came up if I paid my income taxes or not. I've done some bookkeeping work um, for a nonprofit in the past that used to get some federal funding for some of its programs related to housing, and it just never came up. So maybe there's a situation I'm not thinking about, but at least generally speaking, I don't think it would be an issue.
That's helpful. Thank you. All right. Another great question from Gabe. Is there any harm in reducing the withholding to zero on your W-4 and then deciding later when filing on whether to pay or resist? I think that was something you were kind of recommending that if you want to have flexibility, you can do that, but maybe you can save it more. Or would you accrue interest? I mean, if you aren't having the withholdings, are you accruing interest? And then they go on. I don't like the idea of paying war taxes each paycheck and like you said, giving the government an interest-free loan. So you just want to share a little bit more on that question.
Yeah, so if that's a good question. If you were refusing to, like, yeah, if you withheld all of your federal income taxes, and then April 15th came around, you decided, "Well, I'm going to pay." Um, there is there is a box on the federal income tax form where if you haven't paid in enough during the year, there technically is a small penalty. It's not significant. It's based on a percentage. It's a pretty complicated formula to decide, like, do you qualify, and then what is it? Like, what will the amount be? Um, which I'd say is one of the advantages also to paper filing, or at least filing the records yourself, is that's one of the things where when I paper file for myself, I never hit myself with that penalty. And the IRS often does not go back and decide to hit me with it either. But if you're having someone do your taxes, and they're just probably having a computer program handle it, the computer program might automatically ding you for it. So you could, I mean, again, I think it's a very small penalty, but in that situation, if you wanted to try to avoid that penalty and you had someone doing your taxes for you, maybe ask if they could print it out and you could say, I want to paper mail it in. And then you could essentially go on the internet, find all those forms, reprint them out, refill them all out, and remove that penalty. And the IRS would probably never uh, enforce it.
Great, thank you. I think I have two more questions. Other people are more than welcome to throw up a hand or reaction or put something in the chat. My first question is kind of like, I guess I'm thinking about if you were going like the route of actually like writing a protest letter, stating your reasons, stating what you're doing, because it is a form of, civil disobedience, as you said. Um, to what extent do you have to show like show special grounds, for example, religious status, I mean, I'm thinking of kind of the corollary to being a conscientious objector and not, serving in the military. Obviously there like are ways you can do that. And have cases been litigated where people have, shown, for example, religious faith that keeps them and so in within the framework of freedom of religion, like saying being able to kind of use that as a basis and then actually having that stand up in court.
Yeah, so for sending a letter, I'd say its most primary reason, or the reason probably most people do it, is they know someone will actually read it, especially because any paperwork that comes in, the person who's then scanning it in to process your tax forms will also see that letter and they'll read it and scan it also, because they need to make sure that everything is included. And, if you send something to your congressperson, who knows if someone actually ever reads it in their office or not. But here, at least it's read, and many people just want to say, like, if it would come up in court at some point, this might make their case more sympathetic. But legally, it doesn't add any standing. At least it hasn't. Um, Conscientious objection has seemed to be something that only covers if you were going to participate yourself killing someone, but paying someone else to do it isn't something that's been recognized. Though, oddly enough, in the European Union, there we've seen some movement where it didn't eliminate the tax debt, but there was a case of a family in Spain that they, based on kind of the conscientious objection laws that are present in the European Union, they they objected, well, initially to the whole amount, but the court ruled they have to pay the regular amount, which they're not. But they did rule that at least because it's coming out of this moral or religious stance, that they weren't subject to additional penalties and interest, which was kind of strange. It was at least a nice bonus that they knew if they were collected upon, they wouldn't get hit with additional penalties and interest. It's hard to say that if that would ever become the case in the United States. Traditionally, that's always been rejected, but especially with the current Supreme Court and some of the emphases, especially during COVID, the preference that they gave to religious points of view. Um, Maybe if someone was collected upon, you can't kind of sue the IRS before you get collected upon. When it comes to the government, it's kind of hard to sue them. Normally, they have to have done something to you first, and they haven't been active lately. But if the IRS got more active in collecting money and they did take some penalties and interest from someone who had resisted, there is a potential court case there where perhaps they could also get the interest and penalties waived, but it's untested ground.
Great, thank you. A couple more. I think we've got three additional questions that came into the chat. I'll maybe ask them. The first one is, if I forgot to file my taxes last year, should I submit them this year and then include a piece tax return form for both years? And then let me just send the others here. Um, Wondering if like not filing or doing this kind of letter would put a target on your back with law enforcement, like police, or are these two systems totally separate, like IRS enforcement, other forms of law enforcement? Um, and then there's another question, but it's a little more complicated. So why don't you take those two?
All right. So I guess when it comes to the filing question, again, that's one of those where it really just depends on how that person feels. I do know there was a couple on the West Coast a little bit before COVID, where they had been non-filers for like 10 years. And then I think maybe as they're thinking more about future and family, they thought, they really wanted there to be an end point to when the IRS could go after the past. And so they filed for all 10 years. So that's more than what you're talking about. But when they filed for all 10 years, then they kind of gave them a significant number that kind of put them in the noticed range. Kind of looking back, if I'd been having a conversation with them before that they made that decision, I probably would have said maybe just file for the last 3 years. See if the IRS asks you for any more. They might just kind of, if they let it go, if within a couple years you don't hear from them, they probably are never coming after that. Uh, so again, it's a personal decision. You could file for this, file this tax season, let last tax season go. They might ask you about it, and they might never, but for yourself, it might just depend how open do you want to be with them that you owe, how much would you owe? There's a lot of different things to weigh, but it's more a personal decision. But hopefully, at least that gives you a little bit more to think about. With the IRS and police, traditionally, there has not been any relationship. Uh, During the Trump administration, more recently, what we have seen and have never seen before, and we still don't know if it's legal, it's being argued in the courts right now, is with the Trump's focus on deportation. He wants the IRS to help um, find people who he believes are not citizens and don't have the proper paperwork to be in the United States legally. And he's hoping to have essentially ICE be able to confer with the IRS to confirm people's home addresses and some basic information so that they can find these individuals or families and deport them. Traditionally, the IRS, at least written into the federal statutes, there's a lot of there's a lot of protection around not the IRS not sharing information, not even with other federal agencies. It's, similar to HIPAA. They're in your health record. They are very protective about it. So, how this will work out in the courts or whether the IRS, for fear of, different people being fired, might just share it anyways. Um, it's hard to say, but this is new ground. We've never seen the IRS cooperate with another agency like ICE to help ICE find people. Um, or at least that's what might happen. When it comes to local police, I don't think that would ever happen. Um, that just seems a step further removed because a local police department would have absolutely no relationship with the IRS at all. It's not another federal agency. It's so far removed. Um, I couldn't see that happening. At least at this point, it'd be hard for me to imagine.
That's really helpful. Although we, at least in New Hampshire, we have increasingly local police departments signing contracts with
Hmm.
ICE. So something to think about. There's another question from Amy, which I think you sort of talked about people taking the money that they would have been paying in taxes that they don't want to pay for war, and putting it into mutual aid or other kind of community funded programs. Um, and I think she's wondering if you can deduct that as a charitable donation. So, for example, pay 60% of your owed federal taxes to mutual aid and then claim it as a charitable deduction.
Yeah, most people, it's not an option. It's very situation specific. Uh, the way that charitable deductions work on our tax forms now is, or at least, I mentioned that standard deduction before. Like if you're a single person, you automatically get to take a 15,000 standard deduction to lower your taxable income. If you're married, it's 30,000. The other option, if you have a lot of deductions on your own, uh, there are there's a form called the Schedule A where you could take deductions on this form instead of your standard deduction. The main group of people that end up filing Schedule A and not taking the standard deduction are especially recent homeowners, because one of the main things you can take on Schedule A is interest on a home loan. So if you're a homeowner and you pay a lot of interest in a year, you might, break that $15,000, and so you can take even more, but it's a either or. And charitable giving or the charitable deduction shows up on Schedule A. So unless you have enough deductions that make it more advantageous than the standard deduction. And then, as I recall, again, I don't do taxes for a living for over 2 decades now, so it's not my specialty. But as I recall, even on Schedule A, the charitable deduction, it's like a 50% deduction. So, for instance, if you donate $1,000 that year, and now on Schedule A, you're going to take that deduction, you only get to deduct $500. So for instance, if you wanted to donate enough to make up for your standard deduction as a single person, you need to like donate like $30,000 to get a $15,000 deduction. So hopefully, so it doesn't apply for most people, but for some people in a situation, it could lower their taxable income.
Great. Thanks so much, Lincoln. My last question, there's been so many wonderful questions. My last question, which could be the last question, depending if anyone else put something into the chat, is about kind of applying these same principles to state taxes. Obviously, the bulk of federal, military spending is at the federal level, but we do have state National Guard and other ways that state budgets, support militarized expenditures. So just curious if you know groups that are doing that, if individuals who are also, applying the same principles at the state level, and if there's any different guidance there.
There are a handful of folks that I know also resist state taxes, but I would always caution anyone before they consider it. One, it's we have no resources for that on our website. Everything we have is about federal income taxes. There's about 35 states or so that have state income taxes. So, in some states it's not an issue at all. Or at least they make revenue in other ways. Um, but if you're in one of those 35 or so states that have it, whether it's Democrat or Republican, unlike the IRS, where the Republicans have been very heavy into defunding it over the last 15 years. States always fund their revenue services very well. And they often don't, the IRS, even though they can collect, do wage garnishments and bank levies and these sorts of things, there's a lot of things that they can't collect on or different ways that they can't take things from you. You kind of have more protection from the IRS, where states often give their revenue services more leeway in ways that they can collect from you. And they're much more aggressive with criminally prosecuting people who don't pay. So, just to give one example, I had a relative here in Wisconsin a number of years ago, and he was a chiropractor, and he was not a war tax resister, but was just trying to skirt the payment of federal and state income taxes. And on the federal level, when it was discovered that he wasn't paying what he should pay, the federal government just essentially said, "You have to pay," and then he paid, and it was all good. The state of Wisconsin sent him to jail for 2 years. So and that's just, but I know that's not the case just in Wisconsin, but in California, Oregon, like all of these states are much more aggressive. And because you're talking about 30 plus states, even if Nutric wanted to start kind of sharing information, it'd be with our kind of how small we are with our office here, we just don't have the resources to go in a deep dive into what the risks are and everything for each individual state.
That's really helpful. And good to have some very concrete examples. Zenith asks in the chat, if you would then say that it's a lot less risky to pay state taxes and not pay federal taxes. And I think that's what you're saying.
Yeah, yeah. So I mean,
Yeah,
mainly partially just because the risk is much greater. I pay all of my state of Wisconsin income taxes, but I refuse the federal portion.
that's helpful. That's great. Well, I think that this has been incredibly informative, educational. There's so much love in the chat. People just really appreciating this opportunity to learn. This is a new topic, I think, for a lot of people, and people saying they're going to pass information along. So I will just pledge that we'll work together with New Hampshire Peace Action to make the recording available to people who joined us, and we'll post it on our website, which is worldfellowship.org. Please look for future programs. I just put into the chat box our next kind of very practical hands-on training, which is kind of 101 on protesters and the law, how to deal with law enforcement, since many of us are getting out on the streets at this moment. So if you are kind of new to that or you want a little refresher, and it's geared for people in New Hampshire and elsewhere, and it's coming up this Saturday, 10:30 in the morning Eastern time. So please join us for that. And otherwise, just you can also reach out and let us know what similar topics would be of interest, and we're happy to help pull something together, working together with our partners at New Hampshire Peace Action and others, as we keep on trying to figure out how to grapple with the new reality and the continuing challenges that the many conflicts that we are unfortunately responsible for supporting in the world. I want to thank New Hampshire Peace Action for co-sponsoring, and thank Lincoln and I can't say your acronym correctly. We're
Nutric.
say it.
Nutric.
Okay. And Nutric, thank you so much. And we'll also be looking forward to connecting with our colleagues in the New England chapter, the New England Tax Resistance Group. So thanks everyone, and stay connected and keep fighting the good fight. Have a nice
Thank
evening.
you.
Thanks so much.
Thank you.